Hey everybody, welcome to another edition of Midas Letter Daily. Today we're celebrating the comic relief afforded to us by cartoons. Today, the cartoons we'll be watching will be
Bugs Bunny.
Bugs Bunny, better known as Jerome Powell at the Federal Reserve.
Ho, ho, ho.
Yes, indeed, folks. We have a Vladimir Putin.
Oh,
He's going to be played by Elmer Fudd. Silly wabbit.
That's pretty funny.
That's not bad.
That's pretty good.
And then our illustrious Prime Minister Justin Trudeau will be played by Daffy Duck. Joe Biden as Foghorn Leghorn.
The Daffy Duck, the Uncanny Canuck.
Anyways, I'm here with my good friend and co-host, Ed Milewski. Big round of applause.
Yes.
Back in the saddle.
Back
in the saddle, yeah.
Yeah. So
we got a lot to talk about today, Ed. We're going to be continuing our focus on battery metals with our interview with Amanda Hall, who is the CEO of Summit Nanotech Corp. This is a private company that has been the beneficiary of a $23 million in total investment so far, $14 million in a round led by BHP Billiton, so a serious contender in the direct lithium extraction space. Peter Ball is going to join us. He is the Chief Operating Officer of Noram Lithium Corp, which is a lithium exploration and project development company in Nevada. And so he'll be with us today. Follow us on Twitter, Instagram, LinkedIn, and Facebook. Make sure you never miss a show by subscribing to our YouTube channel and clicking on the little notifications bell. If you're interested in getting monthly actionable investment ideas in the cannabis space to your inbox, subscribe to the newsletter at MidasLetter.com. So let's take some audience questions now, Edward.
all right.
Caitlin Lynn wants to know, do you know of any battery metal ETFs or some other good commodity tracking investments? So here's a global ETF, the Lithium and Battery Tech ETF. The symbol is LIT, and it is operated by Murray Asset. So, as with any ETF, you've got to look at how it's structured and how it trades.
And the fees involved.
And most importantly, how it makes money. Because if many cases they'll make money and you won't. So there's one option for you. We don't know of too many others. Nguyen wants to know, is it true that LFP batteries don't work as well at lower temperatures? That's a pretty open-ended question, Nguyen. There is a temperature at which batteries don't work at all. And
It's like absolute zero.
well, absolute zero, nothing works.
Nothing works. So it can't exist.
So, but LFP batteries, all batteries performance deteriorates beyond a certain low temperature. And I think what you mean is relative to the traditional batteries, the traditional nickel NCA batteries, and the bottom line is I can't tell you what those differences are because I don't study the battery technology itself that closely. Brandon Rees wants to know, do you see Netflix recovering after estimations they will only lose more and more subscribers? Well, I'm sure Ed and I have two different opinions about that. Ed, what do you think?
Well, clearly the growth that they enjoyed for almost 20 years, is 15 years, it's quite a long time, and they've, maybe there's just too much streaming in the world, too much competition, and they will not get the multiples that they get.
Let's pull up a chart of them, shall we? Interestingly, if there was going to be a bounce, it would have happened by now. This looks more like an entrenched new value for the company, a new reality.
Well, it could still go through
It could, but something fundamental would have to happen. I'm saying that technically, there's no indication of a bounce.
Disney might want it.
Well, maybe Elon Musk should buy it if he doesn't like the movies they're showing him.
Like somebody that needs a little some streaming in their.
I know. I just finished streaming a whole series on Netflix, Subra, Blood on Rome. It's an Italian gangster film.
You did?
Yeah. It was great. I binge watched it. I actually watched the movie years ago, and then they made this series out of it. And it's so funny because the original movie.
It's funny?
Well, a couple of guys die in it, and then they made a series out of it. And the same guys, same actors died again, except a different way. And now they've made a new series, and the same guys have now died again a different way. So they keep sort of purposing this thing because they build on its former popularity. Somebody buys the franchise and rewrites it. It's quite hilarious. It is so purely Italian.
How many episodes are there?
Well, there's 3 seasons of the latest miniseries. And the funny thing is, the 3 seasons starts with the last iterations, first season almost in its entirety, except to the point where they change the plot, and then the whole thing changes from there. It's really strange. Anyways, I've unsubscribed from Netflix probably 3 times in the last 3 years. Yeah. And I only resubscribe when I'm like pissed off and bored, and I'm like, I gotta find something to watch.
They say that so many people have these
shared passwords.
Shared passwords, yeah, and that's hurting them.
Yep.
Yeah. Yeah. Well, I can understand why. Why would you want your here, I'm going to buy one for the neighborhood.
Well, so they've kind of shot themselves in the foot, and they're trying to make it like, oh, there's people sharing their passwords, bad people. It's like, that's part of the package. You pay for the premium, you're allowed to share the password. So I think they're trying to broadcast to the market that it's not our fault.
It was a bad decision.
But it's very misleading the way they've done it. So for example, here are the 3 profiles that can access the accounts. So this is, and everybody's got their own password. So what they're saying is, if I share this password with my mother who lives on Bowen Island, she logs in, like, wouldn't they know that and just say, no, only one password login at a time?
One of these people should be watching at a time.
Maybe.
That's how you get around it.
So,
here's a great idea.
So to get back to the question, do you see Netflix recovering? I don't see Netflix recovering anytime soon. No, I think this is a new reality for them. And Ed is right. The increase in competition means that their day in the sun is now set.
There's at least 5 major streaming companies and big ones.
Yeah. Well, Disney. Everybody's in the game now.
You know, it's well below half the move. A lot of people are underwater. And Bill Ackman, by the way, who went in 3 months ago with $1.1 billion, he decided, I've had enough, and he took out about $550 from about $650. It lost about $450. This is a guy who runs a major fund. He had a good idea, but he wasn't afraid to say I was wrong.
And it's no problem when it's other people's money.
AOTM, it's my favorite.
So Sam T wants to know, have you put any new companies on your watch list? The answer is yes, Sam. We are watching very closely Tembo Gold, who we signed a contract with. And so I am conflicted in that they are a client and they pay me. However, I agreed to have them as a client because I've been aware of the project for over 10 years. I was formerly a shareholder of it. I haven't bought any stock yet, though I probably will. And but they're a client now, and so Tembo Gold is not just on our watch list; it's at the top of our list. Other companies that I've got on the watch list right now, Lithium Americas is a highly de-risked lithium producing company. It's going to be the next Albemarle, I think.
Yeah.
There's a company called Absorption that's on my watch list that I've actually just signed a contract with to raise money for and to buy stock in and to arrange joint ventures for. Absorption's private, though. It is merging with a publicly trading issuer at some point this year. We'll have more on that later. Tembo Gold. So what else is new on the watch list? I guess that's about it for now. Most of the companies we're watching are private. Tony Casa asked, did you have a good 420? Tony, I'm going to show you a picture of how I spent my 420, because I spent 420 in probably one of the best ways imaginable. I went and visited a grow operation.
What are
you tell me.
Are you in the garden? Are those leaves? Are you in the garden?
Yeah, so that's a strain of Tea Gods, the Green Organic Dutchman's, one of their grow chambers. I want to say that the Green Organic Dutchman is by far the best growing operation I've ever seen, and I've been to, I'm not going to say all of them in Canada, but a lot of them. And I went into the Green Organic Dutchman because I wanted to prove to myself, show myself whether this was actually organic or it was just part of the name. And I can tell you that I rummaged through that whole place, and the guys were very accommodating. And I can tell you that this is organic marijuana. It is top notch. everything these guys do, from capture their own water to recycle their gray water to use cogen power generation, is as green as cannabis gets, and I was just blown away. The chief grower, Chris, was so passionate about it. In fact, everybody I met there was passionate and so into it. This stock's got 750 million shares out, trades currently at 10 cents, but this, if any cannabis company is going to succeed in Canada, I think it's TGOD, and I don't own any stock, and they are not a client.
Are they strictly involved in Canada, or is there any?
They currently have this operation in Ancaster, Ontario, plus one in Valleyfield, Quebec. I can't really disclose anything more than that because I'm not sure if what I was told was in confidence or not. But I think that any company that's succeeding, and they expect to be profitable this quarter.
Sure.
Any company that's succeeding in Canada should transplant that success to the United States. So thank you for your good wishes. I had a brilliant 420. Who was it that asked that? Tony Casa. So yes, I did. Thank you, Tony. Jose Vargas wants to know, there's one we missed. About 15% of S&P companies have now reported. Results haven't been brilliant. Do you see that to be a signal for the rest of the market? Yeah, fundamentally, Jose, I would say that's very much a signal that the market is going to underperform in 2022. All you have to do is look at that list of how the GDP product of the gross domestic product of all countries around the world, according to the World Economic Outlook, has been reduced, and that directly translates into reduced performance for the S&P 500 companies and the rest of the market. Now, here's the thing. If that thing falls off a cliff too far, if markets start to crash too badly, don't be surprised if the Fed has demonstrated historically that it is not averse to reversing course quite suddenly and saying, you know what?
Let's do some printing.
Let's lower the interest rates again and let's print more money.
Yeah.
So that's...
Well, they're buying these bonds all the way up, right? They keep buying them. Well, they're going to lose a pant load because they printed so much money at such lower rates.
So my point is that no matter what happens, more inflation is coming. The increasing interest rates, to the extent that they've done, is not going to have any effect on commodity prices, in my opinion, because of the S&P performance is going to drive so much money out of stocks and into commodities. And so that's why I think, if anything, that's actually going to accelerate the downdraft in especially NASDAQ, S&P, and Dow. If you're enjoying the show, subscribe to Midas Letter on YouTube so you stay up to date on everything investment. We're going to be looking at the effect of the rising interest rates on housing starts in the US and Canada today. We're going to look at the mortgage rate. We're going to look at Bitcoin. And we've got a fascinating little observation on a technical method for how to trade Bitcoin successfully.
A money printer.
Well, somebody asked us in a couple weeks ago, one of the audience questions was about a trading strategy. And we were like, well, I think you were away. And I was like, well, trading is not my thing.
Yeah.
So I thought, I got to go find a good trading. So I found this one, and I've been just observing it. I haven't deployed any capital on it yet.
How long have you been looking at this one?
2 weeks.
You've been 2 weeks, eh?
2 weeks.
Wow, that's a long time.
Works every time.
Yeah.
No, but seriously, the secret of it is, and we may as well start off with this conversation.
Oh, there's a secret?
There's a secret. Well, it's not going to be secret after this. Everybody's going to know. Okay, so let's pull up a chart on crypto. So let's trade Bitcoin, everybody. So if you zero in here, what we're looking at, this red and green line that is following the peregrinations of the actual Bitcoin price, is the 10-day exponential moving average of the price. Any asset that is very liquid, is volatile, in other words, not in any sort of steady state, but is rather the subject to lots of different volatile.
What's the cap of Bitcoin at?
Well, let's go 5-year look here.
Okay.
So this green and red line, this is the 10-day exponential moving average, and the strategy is that when the day closes above the exponential moving average, that's the day you buy.
On a daily?
Yeah, on a day. Yeah, you're doing day to day.
That's 5 year.
Yeah, no, but and actually this is the 1 week look too.
Okay.
This is just so you can see the effectiveness of the strategy over time.
Yeah, but here it stayed green forever. Like, I mean, look at that.
Well, but that's the thing. But if you go to 1 day,
Yeah.
you know, and
There you go. It turned over, stays red, you're out.
well, this is yesterday. But so this is there's a good example, the intraday strategy. So here is where the bar broke through the 10-day moving average to the upside.
Yes.
And the next day it closed above the moving average, the exponential moving average. This is your buy day right here. So you would have missed this lift because it didn't close. Well, you might have bought here if you were
on the close. Well, you'd have bought it on the close there.
up here.
Yeah.
Right.
Next day you're thinking, why did I do that?
Well, it's theoretically. Yeah, but theoretically, you're not, just because it breaks through, you're not going to make the buy because you need to see more certainty than that.
Evidence that it's going to stay above there.
Yeah, and there's arguments where in the face of lots of negative catalysts, you wouldn't necessarily pull the trigger right away. But anyways, so this is where you would have bought, and you would have ridden this value appreciation, and there's where it's turned negative, so you would have sold there. So there's what you made. Not a lot, but you profited.
You made something.
You profited it in a single day.
Just like that.
Just like that. So now here again, so this is the trade is broken here. That drops, and then once again.
Well, here you'd be in, then out. So you had a small loss.
But that's 2 hours.
Well.
So if you're that's a day trader who sits on top of his trades hour by hour.
Okay.
I'm trying to develop a strategy for somebody who's going to look at the market a few times in a day.
Oh.
Right. So this is the thing. So let's take a look at this move here. So here's the day that it broke above the 10-day moving average. This is the day it closed above the 10-day moving average. So here's your buying day right here. Now you're riding it all the way up, all the way up, all the way up, and here's the first day it closes beneath the 10-day moving average, and you're out. You're out. Here, it breaks above but doesn't close above. It breaks above just a hair, like see it just closes above, but that would not be decisive for me. That would be a little bit too risky.
But on this one, beforehand, it does close above. Right there.
This one.
Yeah.
Yeah. Yeah, but
would you get it? Would you buy?
For me, so this is where the strategy is tweaked. That's a buy signal.
Right.
But do you buy or do you wait for confirmation the next day?
Yeah.
So that's what you want to do. You watch this. If you want to minimize the risk, there's the signal on this day. Here's the confirmation on this day, but you don't get confirmation. Well, you get weak confirmation. So maybe as a conservative, you're not going to pull the trigger on that. The next day here, you get a confirmation, but it's still opened below the average. So I'm going to wait. And then next thing you know, here it is, and you're in sustained free fall. So there was not strong enough confirmation in that little thing to buy in. You might have made some money in this little thing, a little bit. But you might not. But it wasn't meaningful enough.
It was a mosquito.
Yeah. It wasn't. It was a waste of time. You want big moves. So now you're sitting on the sidelines. And here we have, this is the 4th hour.
Right.
Wait a sec. This is the 1 day look. Yeah, this is the 4th day, rather, of a buying signal with confirmation. And you've got this massive candle to the upside. It's obviously not closed yet today. But, if I was a fundamental guy, I'd say, well, it's closed, it's had a run here, so I'm going to back off. But this is clearly giving the signal to buy.
If you were a fundamental guy, we might be giving this little sermon out of a church.
I don't know how to respond to that. Yeah, that's quite possible.
There you go. See?
Anyway, so this is the strategy that we're evaluating, and I'm basically following it. I haven't put any money into it yet. So, but somebody asked from the audience for a reliable trading strategy for crypto, and this is the one that seems to be playing out.
Okay. Well,
so I'm going to watch it for.
Let's watch it.
You know what? I'm not going to jump in on this strategy until I see a major correction to the downside. I want to see something going down here.
If you put it in the bigger picture, it just looks to me, you got this unbelievable, crazy top. And if this thing starts to roll over, there's a trend line in there, you know, blah, blah, blah. I'm just saying, if you want it, you don't want to see it crap out here. Because here it looked like it was going to end forever, didn't it?
Let's go test our strategy. Where was it that you said was going to end forever?
Well, here, right there, right about there, we were talking about how, and I would say, bang, bang, bang.
This is going lower.
There you go.
So, but then look. Here's your breakout.
It broke. That's right.
Here's your confirmation.
Yep.
Here's your confirmation.
You're still in. You're still in.
So here's your buy, even on a conservative level. Yeah. This is your confirmation. You're bought here, and you're riding it all up, and you're not selling it till even if you're delusionally optimistic, you're not selling it till you get this candle. So you're still keeping all that profit. So we'll see. Like, are we going to make money here? As soon as I figure out how, I'm going to put $5,000 into Bitcoin on this strategy. The next time I see a major correction to the downside, I'm going to wait for the signal to turn. I'm going to put in $5,000, and I'm going to leave it there until I get confirmation of a reversal in the 10-day exponential moving average.
There you go.
Keep in mind, this is not the simple moving average. This is the exponential moving average.
Yeah.
So, more on that later, but now let's talk a little bit about the effects of the interest rates on the housing market. Here's the reality, is that it hasn't affected housing starts data at this point. In fact, one could argue, if we go way back here, that housing starts are approaching pre-financial crisis levels, and this is 2005 here.
Right.
So this was the height of a mania, and we're heading back that way.
Well,
now you remember, you spoke to somebody, market participant, who said that we're in for a market melt up before we're in for the market melt down. And this is always the case with major crashes to the downside, is they are preceded by the epitome of the hysteria of the day. So there's 2005 and the housing stuff. If we looked at the NASDAQ, and then so here's the dot-com mania right there. And so zooming in on, let's see, I want to come right in here. So zooming in on this, before the crash, there was a hysteria. And so arguably, let's go fast forward to the housing crisis. Now the housing crisis,
I know, it's a blip. It's back there.
Yeah, exactly. It didn't affect the stock market so much.
Look. That was the greatest travesty, but they've printed so much money.
Well, this valuation is a result of the exponential magic of fractional banking.
They've diluted the shareholders.
Well, but they've also created value, because all these shareholders have invested.
And their friends.
Well, exactly. Not for you and me.
You know what? Time for a revolution.
Stevie gets the pitchforks.
And the big guy over in Russia is the guy starting the revolution.
You know, this is why the war, the invasion of Ukraine serves American interests, because it keeps the socialist element in America in check. Because if you say these billionaires are doing too much damage to us with their greed, they'll say, the response is, well, you want to be do you want Putin in your backyard? Do you want that murderous son of a bitch running the whole country into the ground?
Well, they're afraid to say no because he'll get shot.
Well, this is the thing. This is not part of the discourse in mainstream global financial media. Nobody talks about the geopolitical upside in the war in Ukraine for the West. And I mean Europe and North America.
Right.
But there is a lot of upside in that, and that's why we are restricted to supplying arms and money. But no, we're not going to send any troops in, because our interest is that the war continues until The USSR is weakened, Ukraine is eviscerated, and all those, it's actually 5 trillion cubic feet of natural gas are now up for grabs. And guess what? The negotiated settlement is going to be carved up between the Russians and the Americans. You mark my words, Edward. What do you think Joe Biden's son was the director of Burisma for the company that controls all of those assets in Ukraine? Anyways, that's just speculation.
What if they switch to electric energy in the meantime? But you know, there's always periods. You go back 30 years in oil.
Okay, let's take a look at that.
Booms and busts. Booms and busts. Look at this move. Look at this drop.
Well, that's the housing crisis. That's the collapse of the housing market.
Certainly, the oil got destroyed somewhat. Dropping price of oil is good for the economy.
Well, yeah, if you look at it, oil got crushed after the housing market got crushed. So if we were to add in here, the housing starts, you'll see, started to drop. Let's see, in 2000, this is Bear Stearns crashing here in 2006. That was the first volley of the collapse.
Right.
This is...
And oil kept flying.
Oil kept flying, exactly. It wasn't until we bottomed out here that oil finally started to collapse. Why? Because the economic impetus that drives the consumption of oil had been wiped out in this crash of the housing market. And so that was followed by...
Yeah, I know, but you know what? And again, not to be argumentative, I would just say it's not so important why. It's important to note that these are very volatile. Look at these moves.
Yeah.
There are people that are smart enough to know to make money most of the time. Not most of the time, but if you're right 60% of the time, and you've got billions, you're going to have billions more.
Assuming you invest the same amount every time.
Well,
because you can be right 99% of the time, but if you bet the farm that 1% that you're wrong.
But these people have systems. They're not doing this.
Like our system. Yeah. Like our EMA 10-day system.
Oh, there you go.
Yeah.
There you go.
Hey,
they just got it from us. They're going to make more.
Oh, and I forgot to mention that I did not, by any stretch of the imagination, come up with this system on my own. In fact, you're going to laugh, but I actually learned this system, the SMA 10-day exponential, on TikTok. TikTok is my investment advisor now. And don't laugh, you will be surprised at how much good financial advice is coming off of TikTok. But I would also point out that just like in the real world, 99% of it is schlock. There are some gems in there. So let's talk about this in the context of the World Economic Outlook report, the biannually issued report of the International Monetary Fund that predicts GDP output for the whole world. And that report came out on Monday this week.
It was a
basically, they predicted 8.5% drop in GDP for Russia. This is the global GDP projection as of April 19th, 2022 from the from the International Monetary Fund's World Economic Outlook document. As you can see, 2021, the economy in the United States grew at 5.2%. They're projecting 3.3% in 2022 and only 2.4% in 2023. So what does that tell you? That tells you that economic recovery post-pandemic is not going to happen as strongly as possible. And as they make clear in this report, the war in the Ukraine being prolonged is having a detrimental effect on the ability of the world economies to recover. Everything is down. Nothing is up.
Well, I got to tell you, I mean, you can see, how when the world has never been so indebted and you raise interest rates. Listen to this one. If you bought bonds a year ago, like the 20-year U.S. bonds, I think you're down 28% in the principal.
Unbelievable.
28%. Well, it's going to take you 8 years just to get that back by holding the bond.
Right. So if you want to protect yourself against this financial devastation, I am saying you've got to have some investment of some sort in the lithium space. And direct lithium extraction technology is one of the key technologies that is going to replace the solar evaporation pond methodologies that use a great deal of water. My next guest is going to tell us why that is. Here's Amanda Hall. She's the CEO of Summit Nanotechnology. My next guest is Amanda Hall. She's the founder and CEO of Summit Nanotech Corp. Thank you very much for joining us, Amanda.
Thank you for having me.
Amanda, your company has really sort of come to my attention suddenly, like sort of filtered to the top of all of the direct lithium extraction technologies that are clamoring for world dominance, if you will. And obviously, I guess it was a total of $23 million in financings you obtained through a Series A financing. And so I'd like to hear from you just how did you evolve from just geophysicist to nanotechnology specialist?
Just a quick correction, we raised $14 million in our Series A, but cumulative with the previous rounds, it came out to about $25 million. So just wanted to clarify that. So geophysicists are stewards of the earth. You know, we use science to make sure that the earth is being not just respected, but that the extraction processes that are occurring are done efficiently, effectively, economically. And so I've been trained in this for decades in my field. And when I saw the ramp up curve for lithium coming, it looked like a tidal wave to me. And I thought, holy cow, we need to get some good processes in place before this wave hits us. And so I felt a huge responsibility as a scientist, as a human, as a mom, to try and fix this problem before it hit us hard.
Summit Nanotech's technology is obviously got some features in its developed research to date that gives comfort to the likes of BHP Billiton, sufficient that they're going to participate financially. So can you describe for us your technology in the context of other DLE technologies, where yours is different and what drove you to that differentiation?
I think the beautiful thing about DLE today is that we're all at the front of a precipice almost of the future of the unknown, because DLE has never been commercialized. And so what's really nice is that a lot of us who are developing technology, we're bouncing ideas off each other and we're pushing each other to do better and better. And so, I even said to my team just a couple of weeks ago, even if our company fails, we participated in pushing the sector to see that there's new ways of doing things that are better and of making our competitors even strive harder for that goal. And so it's all around, it's a good thing. But so as we developed our technology, we did a lot of customer intelligence gathering and asked a lot of questions about what it is that we needed to improve on in order to make direct lithium extraction technology not just more economic, but more sustainable as well. And so by marrying those two things and making sure that what we are bringing to the field is robust and scalable, we really did come up very quickly with a solution that miners want. So it's super exciting.
Is yours then of the membrane filtration variety, or is it of the selective ion transfer adsorbent bead process?
The heavy lifter is adsorbent, and that's really the thing that normalizes the brine that's coming in the front end. And then beyond that front end piece, we have a lot of other technologies that we string together to do the full complete process. So it's an end-to-end process where we take a raw brine, we have to pre-treat it, we use the adsorbent as our heavy lifter to normalize, and then we have other methods of recovering water and purification and carbonation, and we're even working on a hydroxide process as well. But always keeping in mind low energy, low pressure, robust, scalable, and economic.
I hear about the adsorbent bead element a lot, and my question for you is, how many cycles does an absorbent bead load last in your case, and how important is that to the cost of the entire operation?
It's extremely important. And there's a big difference between ion exchange beads and adsorption beads. One operates with an acid base swing, and the other one operates with a concentration swing. And so we wanted to veer away from acid base because it's hard on that environment, that like wild pH swinging environment is really hard on the sorbent, and it degrades it faster, and they have to be replaced more often. So we went with the concentration swing adsorbent. And so it's a much gentler process. It's just a water-based process. And so as long as we're recovering our own water and reusing it, the beads last a lot longer. And what's coming out of the beads is compatible for reinjection, which is another really important part of DLE. If you can't reinject the spent brine, your project is going to be a mess. You end up causing more harm than good. And so making sure that the spent brine composition is compatible for reinjection is a really important part of our process.
And is there a great deal of pre-treatment necessary to brines that might be perhaps richer in contaminants like particularly boron or magnesium?
Those two are not as much of a problem, but every reservoir is different. It's all unique. And even if you drill in different parts of the reservoir, the composition changes. It's like a living creature almost underground. So really understanding aquifer management, understanding aquifer dynamics is an important part of making sure that the process itself matches what's coming out of the ground. And so if we're drilling a well and we're getting compositions with high boron, high magnesium, that's not a problem for us, but there are things that are a problem. So iron, for instance, arsenic, like there's other things that we have to watch out for. But as long as we're aware of them and we build into our process a response to what's coming out of the ground, automation is very important. So being able to use sensors to identify changes in the environment of the brine composition and then adjusting the process so that it meets those needs is really important too.
So I guess brine composition can change from depth of the salar or the source material as well as from lateral geography. Does this mean that the cost of developing a end-to-end solution is custom or original for every single brine?
When we put our business model forward to customers, it's like a table. It's like a table that it's like, if these are the situations we're dealing with today, this is what we'll charge you. But if it changes, we can't charge you that anymore because we won't make any money. So, we have to work with the customers to come up with a business model that makes sense for them and us. And it really does wildly change depending on the composition of the brine.
What is the business model that you see as the winning combination for the developer of a salar in Argentina versus, say, a Petrobrine reserve holder in Saskatchewan?
My belief is that adaptive positioning is your best friend. And so we'll sit down with a customer and say what works for you and what works for us, and we'll figure it out together. And so ideally, we would do extraction as a service. We'd come in with our own equipment. We would do the extraction, give the product back to the mine owner, and they sell it into the market. For us, that works beautifully because it detaches us from the volatility of the lithium price itself, which sometimes is good, but sometimes it's not good. And it also detaches us from the owning the land. So like, let's say, for instance, we're working with a Chilean miner and the Chilean government decides to nationalize lithium. Well, guess what? We're out of luck. So, there's ways that we can de-risk our operations today by setting up a business model that's adaptable. But we're open to JVs. We're open to extraction as a service. What we're not open to is selling our technology or licensing it, because then we lose control of our intellectual property, and that's not okay for me. So we can work with customers up to a point, but protecting our IP fiercely is what we stand on.
Is your intention then to offer access to participation in your company's future through an IPO at some point?
Perhaps. Yeah, we're probably going to raise a huge Series B coming up shortly here. So participation through that with mostly venture capitalists. We're kind of long gone from the angel stage. But yeah, we may IPO someday. It's who knows what the future holds.
Is the grade of the brine in terms of lithium concentration, is that an important factor in the economics?
Absolutely, yes. In fact, we have a cutoff where anything less than, and for us it's 200 parts per million, we don't even play in that space because it's harder technically and it's less economically viable. And so for us, it's like anything over 200 is okay, anything less, not okay.
So that pretty much eliminates petroleum produced water brines from the entire equation.
Today, yes. In the future, we're hoping to figure out a way to create, we want to build a new module that would go at the front end of our process that would somehow magically get rid of the hydrocarbons, get rid of the sulfuric acids, and concentrate the lithium, but not the contaminants. So that's a huge ask though. And we don't have time to do that right now. We're focused on the easier brines to process, but we'll come back someday and work with those oil field brines.
Amanda, I really appreciate your input and participation today. I hope to have you on as a guest sometime soon in the future. Thank you.
Thank you very much for having me.
You bet. Bye for now. We know that the price of lithium was last quoted in the futures market at $82,000 per ton. And it was just back in February, we had Joe Lowry on, and he said he says lithium, some people are saying lithium could go to $70,000 a ton. He says, I'm not saying it couldn't. He said, but that's a big number from where we are today. And back in February, lithium was trading at $42,000 per ton.
Wow.
So the price of lithium
big wow there.
Yeah, the price of lithium has essentially doubled. And companies like Amanda's are going to be, if successful in extracting lithium products from lithium brines at a minimum standard, they are going to be very valuable companies. And we have a company called Absorption that we're going to be talking about here a little bit more in the future. But that company is private right now, so we're not going to. We'll have the CEO on shortly. Anyways, our next guest is Chief Operating Officer of a Nevada-based lithium play. Peter Ball joins us now. He's the COO of Noram Ventures. Peter Ball joins me now. He's the president and COO of Noram Lithium Corp, trading on the TSX Venture under the symbol NRM, and in the United States under the symbol NRVTF. Peter, welcome.
Hello, James West. Nice to see you again. It's been a few years.
Great to see you, too. We've seen each other in many incarnations over the years. But today you are the Chief Operating Officer of Noram Lithium Corp, which we have covered previously. I think the last time we had the company on the show was in 2019. So why don't you take us from 2019 to present day? What has changed to bring you aboard?
I joined 5 months ago. My goal was to help on the engineering side, help find some capital, and help take this asset to the next level as we push to the next stage of the engineering side. So first of all, what are we all about? We are focused on the Zeus Lithium project in Nevada, right next to the highway, paved road, infrastructure, power going right through the middle of our project. Recently, well, I guess let's start in 2021. It was one of the biggest years in the corporate history, completed its 5th resource update, which has enough resources now for 200 years of mine life. And what do I mean by that? In December of 2021, we completed a preliminary economic assessment with a 40-year mine life, and using the long-term forecast price of lithium carbonate equivalent, we have about a $2.7 or $2.67 billion market cap, net present value, NPV8, with an internal rate of return of 52%. So we're at the PEA stage. We're in one of the most active areas in Nevada, sitting next to, as maybe your shareholders or listeners in 2019 followed, right next to a company called Albemarle Silver Peak Mine, which is the only lithium brine project or mine in the United States. They've been there 60 years. So picture the brine leached into the clays, and now all these players, which of course is us, we're fairly advanced, sitting right next to Albemarle, pushing forward this project, cashed up, ready to go.
Yeah. So when it comes to lithium in clays, there are scant examples of lithium producers producing from clays. So have you got a proven technology that you're using to develop your clays, or what is the process of extracting lithium from clays look like?
Yeah, so if we go to Nevada, there's a number of projects that are advancing their final metallurgical studies on how to exactly extract the lithium from the clay. So right next door to a company which I think many listeners should Google is Cypress Development Corp. So picture, they have a deposit, we have the other half. They trade at 260 million market cap, we trade at 70. We have the exact same deposit, metallurgically speaking, mineralization, geologically speaking. So they've advanced it. So we're basically, picture deposit 3 kilometers long, 1 kilometer wide, and about 80 meters thick, roughly. There's no drilling, there's no blasting. You scoop it out of the ground, you put it through some roller crushers, you stick it into some big tanks, you disaggregate it 30% solids to water, and that kind of breaks up the clays. Then right now, groups are looking at either adding sulfuric acid by building a sulfur plant at site, which we're looking at, and some groups are looking at hydrochloric acid, And it's good. This doesn't really interfere with the environment. There's no cyanide. So it's probably one of the easiest mining methods, processing methods that is being engineered and being finalized. And about 40 miles to the west, another company called Ioneer is actually going into construction this year. They have some clays that they're going to be extracting. And the Lithium Americas has the Thatcher project north of us. So we got a bunch of clay. Everyone's finalizing the metallurgical mechanism to extract it. And really, we're pushing to PFS. We'll do some pilot plant tests this year. We've got about 18 million, 17.5 million in the bank. We have no warrants really above us. We have no debt, and we only have 88 million shares. So we're fully financed all the way through the definitive feasibility study with a recent group that I just brought in as a strategic investor out of Toronto.
So what does your PEA have as the capital expenditure requirement to put this thing on the map?
Yeah, so the CapEx, again, if the listeners go into our presentation on one of the pages 3/4 of the way through, it highlights that ours is $528 million to build a mine. And really, 300 million of that is the sulfur plant. And 100 million of that is actually contingency. So it could only be 428. And if you put that along and compare to a number of our peers, we have one of the lowest cost operating cost profiles, one of the most robust PEAs, one of the highest IRRs, one of the longest mine lives, solid grade, fast payback period. And it's kind of getting exciting because even Elon Musk texted or tweeted last week that he says enough is enough. You might as well just go buy some mines. And I was talking to a colleague who's well connected within Tesla, and Tesla has asked a colleague of mine find Elon Musk some mines to buy because he needs the feed. Because there's going to be a big crunch in about 2040. So the strategic investors that just bought into our company, and we'll do about 31,000 tons of lithium carbonate equivalent per year. So in 2040, there's forecasted to be 4 million tons of a supply crunch. In other words, the market's going to want 7 million tons per year. It's only going to see 3 million. So really, as a new investor in our company said, Peter, the market needs 100 of your companies just to barely meet the need of this EV revolution or whatever you want to call it.
You bet. So then, in terms of lithium production, in this price environment, grade is not really that relevant beyond a certain level.
Yeah, I would agree on that. The margins are so high in regards to all the operations that are going into production where it is now. I mean, it's $92,000 tons per day. $92,000 per ton today, the cost of that lithium carbonate, but it's going to come all the way down over the next 5 years, down to about 16 long term. So really, I mean, ours is going to average about 1,107 ppm over the entire mine life, giving us a payback period of 3 years. And really, we're going to crunch the 40-year mine life maybe to about 25 to see how the numbers come in. You know, because after 20 years in NPV, it doesn't make sense running the numbers all the way back 40 years to today. So
Sure. So have you got any partnerships with any future offtake people at this point? Have you had those discussions yet?
Lots of discussions always going on. I mean, everyone, you know, it's lithium is designated as a critical mineral in the United States. So it's kind of hard with the different, you know, channels to market of how to get our lithium to China, for example, or Korea. But there are a lot of players knocking on the door at all times, trying to secure an offtake, but it's a bit early for us. There's no rush for us. We got an incredible project and we'll get a better dollar for the shareholders later on. And really, you know, as our new largest shareholder said, Peter, over the next year, as you go to the PFS, pre-feasibility stage, you're just going to be a takeout with a nice premium, or you're going to have a nice, beautiful, robust mine in about 4 years. So they're excited because they bought a 1% royalty in our company, which is the reason that we took them on as strategic partners. They want nothing but the best.
Right. Okay, so then Do you see that there is a risk of oversupply in the lithium space at all, despite these rosy projections? I mean, especially in the case of, I've been tracking a whole bunch of alternative battery chemistries that don't contain lithium. So how likely is it that one of those might displace lithium-ion batteries in the future?
Well, I talk to the people that are a heck of a lot smarter than me, and they follow this space, they invest in this space, and they're putting billions of dollars into companies like ourselves, and of course a lot larger. They don't see any change. They don't see anything on the horizon that's going to give a hiccup in this. And again, the market needs about 100 projects like us just to barely meet the need. So there might be new technologies, but they're not going to fill the trough to really supply the markets. And as you can see, Biden recently put forth an executive order to help finance, provide funding, provide creative ways to bring lithium development projects faster to the market. And even Canada recently did $2.5 billion to help some of the producers, the spodumene projects up here, or the hard rock ones.
Yeah, the Defense Production Act that Biden used to set aside at this point $2 billion for U.S. projects. They have to be domestic in the U.S., in the territorial U.S., can't be for export to China or Korea. Do you expect to access any of the funds under that funding facility?
Yeah, I mean, it's something we have to look at. Again, we have enough money and have access to pretty much whatever money we want going forward, but non-dilutive free cash from Biden and the U.S. government is something that we'll definitely take a look at. I've seen a number of groups actually have engaged some legal teams to access that capital. So absolutely, why not? It's free. And but again, we're financed. I mean, we have no more dilution coming to our company for probably 3 years. We got 17 now. We'll probably finish off the year with 12, 13 as we do pilot plant, drilling, PFS. And then next year we'll start doing some social, environmental, and more de-risking of the asset. But we're on the right path, and it's always good when you're at a company and as a new potential investor, there's no dilution, fully cashed up, perfect jurisdiction in the world, number one on the planet, which is Nevada, robust asset, low cost to build, low cost to operate. It's got all those check marks on the right side of the page, or the left side of the page, as I call it.
You bet. All right, Peter. Well, that's a great update on the company. It's really made some progress. Congratulations on joining, and thanks for your time today. We'll come back to you soon and get an update again.
Thanks, James. Have a good day.
Thanks, you too, Peter. Bye for now. These guys are approaching their all-time highs here, or not all-time highs, but they're definitely trending higher. So it'll be interesting to see what happens. Anyways, I hope you enjoyed your show today.
Yeah, very good.
I enjoyed your show today. You had a great show today.
I had a great show today.
We had a great show today. Edward's on the wagon, so we're not drinking beer after this. Yes. Only I'm drinking beer because I'm not on the wagon. And today is 4/21, which means my mouth is dry from 4/20. Yeah. That's horrible. Anyways, thanks for watching, everybody. Bye for now. Woohoo!
Good night.